Hello everyone, in this video we're going to learn about how to invest in the stock market. My name is Samuel Kunto and this is going to be part 1 of our investment in the stock market journey. So let's get started. Hello everyone, in this video we're going to learn about how to invest in the stock market. This is going to be part 1. We're going to explain the stock market, what you need to know to invest, and how to buy and sell stock on Robinhood. If this is something that interests you, then just get ready. You might need your pen and paper and your notes and jot down some stuff. So let's get started. If you get through to this video, I have some 4 tips for you to be a successful investor in the stock market. Let's get started. So what are we going to learn from this video? So the first one is who is this video for? So this video is for anyone who is starting to invest in the stock market. There's so many like a lot of perception about the stock market and a lot. So as a beginner, you need to learn a little bit about the stock market. So what is a stock? And then we will learn about some examples of stocks, some companies, and then how to buy and sell stocks. I will use Robinhood as an example. And then why do you need to invest in the stock market, or why some people invest in the stock market, how to make money in the stock market, and the last but not the least, the 7th point is going to be my 4 investment tips. So let's get started. Alright, so we see a lot, you hear that in the news, you hear people say stock. What is stock? So a stock are a unit of ownership in the company, also known as a shares of a stock or liquidity. When you buy a shares of stock, you are purchasing a partial ownership stake in a company, entitled to you in a certain benefit. Some of the benefit will be a dividend, voting right, and stuff. So that's one from fairbiz.com. So to sum everything up, simply means an ownership of a company. So stock simply in a short, ownership of a company. So you buying the ownership of a company. So example, Apple, you have Amazon, you have Nvidia, Tesla, Google, Adobe, Microsoft, Coca-Cola, just to name a few. So if you buy shares or stock of such company, that means you buy part ownership of it, and some of the reward will come as a dividend. They'll pay you and other benefits. So that is stock, and these are some of the examples, some companies that you might use, your friends will use, your family members use it, and you see them everywhere. So we have McDonald's, we have Walmart, you shop there. Google has the companies like YouTube. So now you're watching me on YouTube, you are using some of the companies that have shares, and like Google have YouTube. We have Coca-Cola, you have Ford, which make cars, you have Starbucks, you get your coffee. Maybe you watching me, you just get a coffee from Starbucks, so they also have a shares. So if you are thinking about how to start investing, you don't need to go too far. There's stuff, the products that you use and you enjoyed it, and you look for the company, you buy stocks in it. That's how you start. So we have more examples. We have Disney, we have Pepsi, we have UPS, we have FedEx, we have Amazon, arguably one of the best and the biggest e-commerce now. You buy, I hope you buy stuff from Amazon, your family or friends, people you know buy it. So if the product and the service that the company is offering, if you enjoy it, then that gives you one of the key to know that this is a company you want to invest in it. You want to own part of the company. Okay, so we talk about stock, we talk about meaning, and then we get examples. So but the stock market is divided into 11 sectors. So 11 sectors in the stock market, and that's how all the stocks in the stock market have been divided. So let's get into it one after the other. So these are the 11 sectors in the stock market. So number one, that is that it's not, it just randomly selected. It's not. So these are the 11 sectors in the stock market. So number one, that is that it's not, it just randomly selected. It's not like the first one is better than the second one or anything like that. Has been alright. So let's get to the sectors in the stock market. So all the stocks has been grouped into 11 sectors. So these sectors are groups based on the product, the services, of the companies. So it's not like the number one is better than number two, or no. It's just groups under different categories or sectors. So the first one is energy. So the energy sector is like, it includes companies engaged in exploration and production of oil and other hydrocarbon, transport, oil, gases, and other stuff. So you have example as British Petroleum, Chevron, and etc. And then we have another one. We have the number two is material. So the material sector include companies that produce chemicals, glass, paper, forest product, packaging, construction material, etc. So we have the done, they produce, they packages materials. And then we have the industrials. So the industrial companies include companies that manufacture aeroplane, like defense product, electrical equipment, and then they also involved in the aerospace transport industries. So we have the Delta Airline, we have Caterpillars, they manufacture construction materials. Delta Airlines, you have American Airline, you have JetBlue, and so on. Mostly the air complies with the airline stocks, the construction. Number four is utility. So we have the utility stocks. So the utility sector include the companies that provide gas, electricity, water, etc. So you can have Duke Energy, which produce. And then you can have National Grid. National Grid also provide electricity. And then you have healthcare. As the name implies, the healthcare sector include companies that provide services, care and services. So you can have the and then Johnson and Johnson. They provide baby oils. They provide a lot of baby stuff. You have United Healthcare. They basically provide people with health insurance. That's the sector. And then we have finance. The finance sector compares the banking. There's a companies that give mortgage, consumer finance. So you have Visa, you can have Chase, you can have Bank of America. All those comes under finance sector. The next sector we're going to discuss is consumer discretionary. So this sector, the consumer discretionary sector, we have example as Ford, Home Depot and stuff. So they include companies that provide durable goods, to leisure equipment, clothing, or you get like the cars. So you can have Tesla here, you can have Home Depot, you can have Toyota. They are all companies under consumer discrete. The next sector is consumer staple. The consumer staple sector is example is Coca-Cola. So they are companies that provide food, beverages, drink, tobacco, non-alcohol drinks, and etc. So you can have your Coca-Cola here, you can have your Walmart, and so on. You have technology sector. The technology sector is going to be information and technology, which is number 9. We have the companies like Apple. You have company like Microsoft. You have company like Adobe. These are the companies that are Nvidia. They are all companies under the technology sector. So they provide software and IT product and services. And then last but not the least, you have the real estate. So the real estate include companies that provide real estate development, and they offer storage and all other services to consumers. And we have example as Fabric Storage. They are all companies that provide that. So this concludes the 11 sectors in the stock market. So now, why do somebody wants to invest in the stock market? Why? So there's a numerous reasons that people invest, but a few of them is here to make money. So a lot of people invest in the stock market to make money. Overall, stock market goes up. So historically, the market goes up. So if you buy low, you're gonna end up going high. To create generational wealth. So for example, people who invested in Amazon back in 90s, people who invested in Apple when it started, most of them transfer the shares into their children, to their grandkids. So that gives generational wealth. Also, people do it for fun. So mostly option traders. Some of them like $1,000. I want to challenge myself to $10,000. 1K to 10K, like challenge. They all do it. Some do it for fun. And then to transfer wealth. So it's a means of transferring wealth from the wealthy to the middle class and lower class. How because when the market comes down, when the stock are cheap, that's when most of the middle class, most millionaires are made, because some buy it low and then the stock comes up, they sell it high. And then others also use it to pay debt. So some invest, and then at the end of the day, they sell some of their shares as a deposit for buying house, buying cars, etc. So let's check here and see the overall stock market. We're going to use the SPY. Alright, so I said that one of the reasons is that the overall stock market goes up. So we're going to use the S&P 500 index ETF, which has the symbol as SPY. So currently, as I'm recording, the market has closed, but you see today it was down minus 0.13%. Week is up 0.65%, and in a month is down 1.70%. But year up to date, the S&P 500 is up 13%. 1 year is up 19%, and 5 years is up 58%. 5 years is up 58%, right? So the maximum, you can tell from here that since it started, the S&P is up 220.68%. So overall, the stock market goes up, but look, it doesn't go up in a straight line, right? It goes up, comes down, it goes up, it comes down, it goes up, it comes down, here like that. The same thing in the year. It goes up and then it pulls back down, it goes up, goes down, just as it. So this is how this overall stock market is. So if you understand the basics, it gives you the idea when you are buying into the good company. When it pulls down like here, it's a great way to buy. You don't sell out if you buy into a good company. Alright, let's get back into our slides. Okay, so we know from our S&P 500 that the overall stocks move up. So that's some of the reasons why you want to invest in the stock market. So sorry about this. How to buy and sell stock. So you can choose, number one is to choose a brokerage account, right? So in order to buy and sell stock, you choose brokerage account, and some of the brokerage will be Robinhood, Webull, Charles Schwab, Trade, Ameritrade. You can have many, but you have to choose one. And then once you decide which brokerage you want to use, you create your online brokerage account. You create your online account, which is mostly easy. You go to the company's website, you put your basic information in it, you create account, you email your password, and then you start to find your account. So how much you need, it depends. Deposit on different companies, so each company requires different amount, so that also will determine which one you're going to use, because depending on how much you have to invest, it will tell you which company you're going to use. So Robinhood as little as $100, I believe. Webull the same, but haven't used charge swap and Ameritrade, so I'm not sure of the basic. I can make a video about each different brokerage account, and then yeah. So how to buy and sell, we continue. So you can choose from the multiple with the, so we have tasty trade, different account. So what are the factors that you have to consider when choosing a brokerage account? So one, you have to consider the amount they charge, your minimum deposit, and the type of account, whether it's cash account, margin account. These are all the stuff that you need to check. How to make money in the stock market? A, you do the capital gain, so, and then dividend. So let's get to the capital gain. So the capital gain is going to be the amount you get from profit. So let's say you buy Apple at $100, you sell the Apple stock at $150. So your profit is going to be $150, the amount you sell minus the amount you bought, so you get $50. So, and then don't forget the capital gain are tax subject to tax. Then dividend too. So thank you for watching. Have a great day. We will come on for part 2.